Yes, hello to our viewers and a very warm welcome on this evening of 7th May, Sunday from Mumbai. So welcome back once again. So for this episode, we would be taking a look as to what have been the key developments in the oil market, on the Brent, and how it is likely to be moving in the coming week and the weeks. So first up, the crude declined massively last week to close on Friday at 75.30 to the Brent. Now, this decline was not unexpected, as we have been saying all along. In our previous episode, we mentioned that the crude's new normal is going to be below 80. But this decline was still little larger than the most market participants expected. So where does it go from here? The ongoing banking crisis seems to be one of the apparent reasons, but the larger risk has been the recessionary fears, which most had underplayed and which is working on the sentiments. And that is also reflected in the net increase in the short positions in the market. So that is one of the key reasons of the decline. Fed's continued increase, it hiked again 25 basis points, with market participants expecting a pause in the month of June. We would not be so sure as of now, so we maintain an open stance that the Fed could still surprise the market with not a pause, but still a minor increase in June. But that's not immediately roiling the market. What is immediately roiling the market is the data coming out from China, and that continues to disappoint. The disappointing China data is further made tougher to analyze because of the continued curbs on the information coming out from the country. So that has really impacted the fears, or has aggravated the fears as to what level the messaging of the data goes on in China, because the official clampdown, so to say, at various levels of the simple economic data, which used to be freely available, is getting more and more severe. So we need to be little careful as to assessing how this data needs to be read and how much of the triangulation could be possible in terms of analyzing and understanding it. So overall, that remains really bearish for the oil markets. Secondly, when we look at, this is the month, May, where the OPEC announced production cut of $1.65 million is expected to come into play. It remains to be seen how much cut actually happens. We would not peg the actual production cuts to be anywhere more than 40% of the announced cut. So, which in effect, what does it mean? That the markets are oversupplied. The softening of demand continues unabated. So with that, the price expectation on the Brent should really be revised downwards, and we are expecting it to be breaching $70 in about another fortnight from now. So in this coming week, we expect the prices to hover around within 70 to 75, with another decline of about $3 to $4. So that's it for this episode. Thank you. Thank you so much.